Okay, so far the class has completed 3 rounds, and you can see here that net profits per team, this is what business is about. It's about generating net profits. So when someone goes into business, they're going into business to make money and generate profits. When a company issues stock and you buy stock in a company, you're hoping that the company will increase earnings per share and generate profits and generate value. So as you can see here, that the net profits for most teams, except for 2 here at the bottom, most teams have generated an ever increasing amount of profits from round 1 to round 2 to round 3. And there's been a couple exceptions. It looks like 2 teams where the profits have actually went down, and that is a terrible thing for a company to have their profits reverse and be lower 1 year after the previous year. It happens. Sometimes it's unavoidable, but when it does happen, the stocks, bonds and stocks prices get crushed, and investors run from the stock, and they run into the arms of a different stock who is growing their sales and their earnings and their profits. So this is very much like the real world. In the real world, and I'm been following investing in and teaching about public companies and stock market prices and shareholder value for over 20 years now. And in the real world, companies fight every year to increase profits, increase earnings per share, increase profit margins, outwit and perform better than the competition, because they know that that's what shareholders want, and that's what their job as business managers is to maximize shareholders' wealth and do everything they can to think logically about what's going to lead to higher profits in both the short term and, more importantly, the long term. Okay, so we can see here that the teams that didn't have higher profits one round over the next did very bad in points. So investors, just like in the real world, if you don't come up with profits that are better than the year before, especially, we're talking here about a growth industry. Every car in this category, the 4 cars we're selling, they're all increasing in sales in double-digit growth, 20 to 30%. So with that type of growth, there's really no excuse for a company to have lower sales or lower profits. If you're in an industry where things are contracting and sales are going down for the entire industry, then that might make sense to the investors. Okay, this is unavoidable. But in this industry where the sales growth of the cars are growing so tremendously, there should be no decline in profits or earnings per share. So that's why these points are going down. When you have lower profits, the profits hit just about every category in the overview. So you have to really maintain it. Now you could see sort of a trend where the points are trending downward. But most teams scored above that 400 point mark, which is necessary to complete the simulation and get an A grade for the simulation. Now remember that you need to best your performance over last year, because it's a year-over-year performance. You're in competition with everybody else for selling cars and gathering market demand, but you're also trying to improve upon last year's ratios as well. And if you continually do good, you have to keep doing better to get a better year-over-year percentage increase to get the higher points. Okay, so if you look at stock price, there was some change from last round. Just about everybody's stock price went higher. Some slopes are very narrow, very low, and some slopes are very steep, is like what we want to see. So stock prices have been increasing overall for all teams, but that makes sense because you have a market where sales are growing so quickly and profits are growing, you're going to have a higher stock price. Now sales, you can see here, sales are kind of sporadic here. This group of companies are all in the running for they're doing pretty well in forecasting and in building and selling their cars and marketing. This group down here, these 4 companies down here, really need to look closely at why aren't I selling as much as everybody else? Is it because I'm not aware of my true market demand? Am I not accurate in the growth percentages of each vehicle when I forecast my growth in my sales? There's something amiss with these bottom 4 companies. You're really not hitting the mark on your sales. You have to look at this very closely. These companies are all pretty much on track around, you should be, by the third round, you should be over 400 million in sales. If you're not over 400 million in sales, there's something you're doing wrong. And I would suggest reading the user's manual to look at the forecast area, and more importantly, to look at in your individual charts for each individual. Each company has their own individual charts. At the very bottom of them is there's a market versus potential chart that you really have to look at to see what your sales are. You can't base next year's sales based on what you sold last year, because you have to really look at what demand you generated, which I'll have to go over again in a few minutes. I mean, I've talked about it a few times already now. Okay, so earnings per share, you could see a steep drop of earnings per share for this company here and this company. So two companies went down, three companies went down in earnings per share this round, which was not good. This company has moved into first place in earnings per share, and they really leapfrogged from second place to first place. So this group of companies here is doing well in earnings per share. And remember, something that helps earnings per share is higher profits. You have more profits, you're going to have more earnings per share. But you can also buy back stock, and buying back stock helps to reduce the amount of outstanding shares and increase your earnings per share. Okay, so let me go into, I don't want to go into anyone's direct individual team, so I'm going to go into the demo, my demo, and I'm going to go into, so this is the first thing you should do. So I'm going to do a round, just like we'll give you advice of what I think you should be doing. So the first thing you should do is analyze your results and see how you did. Okay, so I have earning points in most areas. One place that can sometimes be difficult to earn points is total asset turnover. I didn't really earn many points here because this is the profits compared to assets. Now, if I'm piling in a lot of new assets, operational investments and new plants, it's going to be hard in a growing company where I'm expanding assets so quickly to get a lot of points here. So I wouldn't expect to get a huge amount of points here. And the same thing goes for the return on investment, because the return on investment also has this total asset turnover is a factor in the return on investment that you have to kind of look at. So this is an area where it's difficult to make a lot of points as well. But every other category, when we talk about revenue, it's very easy to make points because the markets are growing so fast. The quick debt ratios, if you've taken out some debt and you pay down that debt, so in the beginning of the game, you're probably losing points in these areas as you borrow more money. But now that we're halfway through the game, you should be paying back these loan amounts, and you can easily earn points as you pay down your debts. The profit margins, like I said, every round you have to increase your profit margins. So I went from 52 to 58, 33 to 39, and 22 to 27, and earned a lot of points there. But when I increase my profit margins here, I'm increasing my chances of earning points in my return on equity, my earnings per share, my return on assets, my book value. So this kind of trickles down to all these levels. Now my forecasting is pretty good. There was only one area where I lost some points, actually two areas where I lost some points in forecasting. So forecasting was sort of a wash. You don't really look to expect or to make a lot of points in forecasting. You want to keep from losing points in this area, because you can make some points maybe the first round in this area, but once your forecast becomes accurate, you're trying not to lose points here. So this is not a big area. These forecast areas are not a big area to make points, but some area where you're going to prevent trying to lose points to make your forecast as accurate as possible. And I do have here my operational investments increased. This is on the production page. And every time you double your operation investments, you get 100 points. And also you get a cost reduction when you build the car next round. And I had a surplus and got 100 points for that. So there's my 600 points. So now I'm going to go, when I was talking about the charts before, when you look at the performance charts, you go to the very bottom, and this is the chart I was talking about. Market versus potential sales. So here for sedan, my sales were 3,000. I could have sold 3,200. So here is where I need to start forecasting for next round. So I'm going to look at 3,200 and maybe increase that by 20%. I'm not going to go with, say in a luxury car, I'm not going to go with 2,000 and increase that 20% to 2200 because my potential was 23, 22. So all this missed potential here went to somebody else. So I need to forecast off the top of my potential, not what I actually sold, because this is misleading. I did sell 2000, but I could have sold much more. So I'm not going to forecast. If I keep forecasting off what I actually sold by a growth factor similar to what's mentioned in the student user guide, I'm always going to be behind. So I have to always come to this chart and kind of see, here I'm on target. I'm selling, my production is meeting my data. I might have made more than I needed, but at least I'm selling everything that the customers demanded of me. So here is your missed opportunity. So always check this slide before you forecast your sales. So I'm going to go now into the industry, and in the industry, you need to check out your competition. Who is doing better than me? How did they make their cars? What is their how many cost reductions do they have? Am I sort of similar to the rest of the class? And how did they build their car? What was their gross profit margins? What were their points? So you need to do a lot of work in comparison and see where are you failing and where are the students succeeding to try to improve. Same thing happens in the real world. When Toyota started kicking ass, GM, Ford, and Chrysler rushed over, went into the Toyota factory, seen what Toyota was doing, and got a lot of information from all the public information. All the details of the cars are published, and they see what Toyota is doing, and they say, okay, we got to step it up. So that's what a lot of students in this class have to do. You have to step it up. You have to see what, don't be lazy about this. You have to go in and spend time and do your research to improve. Okay, so now you get to the sales page. And again, the customer expectations are higher now. The sales price is higher, but not by much. But luckily, I invested in my operational cost reductions. This is going to help me to maintain my profit margins. Okay, so I'm going to go in and I'm going to quickly put in some numbers here. Now, so here I got 51%. I remember that 58 was my profit margin last time, so I'm going to have to modify this a little bit because I want to try and get as close to that as possible. It looks like I'm going to have to buy some more operational investments because I am falling down in the economy class vehicle. Let's see if I can make it up in some of the other vehicles. Now again, this is you guys completed round 3. This is round 3. So I'm not going to show you round 4 because I don't want to influence the way people build their cars. So this is round 3, which you guys already completed. So whatever numbers I'm putting in here, you guys are going to be, shouldn't use the same numbers because this is a different round than you're currently on. All right. And again, here I'm having a hard time really I got it to 58. I'd like to get it to okay, I got it to 59. At least it's a little bit better. So it gets difficult to really, I understand it's hard to keep increasing your profit margins. But the point is that sometimes you have to make a car that's, doesn't quite meet customer expectations to be able to get to a place where you're beating your sales numbers. You're beating your last year's profit margins. Okay, so it looks like I'm going to be a little bit higher, not as high as I want. So that's a problem. I really am not going to be able to get into the range I want to get into. So I may have to look at closely at my marketing budget. I don't want to over market and waste marketing dollars. And some students have a strategy where they pull back a little bit on their forecast, so they can pull back a little bit on their marketing so they can get a little higher profit margins. These are all different strategies you can explore. I'm going to just jump right to production because it takes a bit of a while to really optimize your advertising here. Now remember, as I said last video, I do expect you to fill in these reflective observations so I can kind of see what you're thinking and how things are going for you. So now I have current inventory left over for 2 vehicles. I'm going to type in include this inventory in what to reduce my production so I have an excess shortage of 0. I always want to have an excess shortage of zero because there's no point in building extra cars and not telling anybody about it. So if forecast makes a forecast, production is supposed to build to that forecast. You're not supposed to make extra cars that no one knows about because they won't be reflected in the financial statements. They won't be, it's not something that's really going to be open and honest with the company. So always want to have your excess shortage to 0 so you're on the same page with the sales forecasters and things of that in that spirit. Okay, so now I'm going to increase my my operational investments. I'm going to double them so I can get 100 points, and then let me see how much if I have all right, where is oh, I got to increase my capacity over here. It's nice that it gives you these warnings if you forget something. All right. Okay, so let's see what I have. $74 million surplus. So I'm going to go back to production, and since I have so much extra money, I'm going to increase my operational investments even more so I can have more cost reductions and have an easier time increasing my profit margin next round. Okay, so I have a $40 million surplus. I'm going to buy back some stock, and I'm going to buy back some debt. Try and increase those points there, and I'm left with $26 million surplus, which is good because just in case I don't sell everything that I forecasted to sell, I'll have some wiggle room so I don't get a deficit, and I'm going to process the round. Okay, so my demo, which is the same thing as your individual practice, just like you guys, going from round 3 to round 4 was a difficult transition because in round 3 I had the deficit that I didn't expect, so I lost 100 points there. My profit margins were very slim because I didn't make enough operational investments early enough to really help increase my profit margins and make up for the increasing customer expectations. So I kind of missed out there. And overall, I only earned 230 points, which is pretty poor. And so the mistakes that I made, if I go to production, I could see that I had a lot of excess inventory, so that's where my unexpected deficit came from. So there's no surprise there. I over forecasted because it makes sense. I really spent no time looking at, I spent no time making an intelligent forecast. I just guessed. And that's what happens when you guess and don't spend enough time on something, bad things happen. However, though, this round I think I can do better because I have a much higher operational cost reductions now. So even though if I look at my performance charts, even though there was only one area where I undersold, the other areas I had a lot of excess inventory. I met all my demand, but I guess the problem being I didn't advertise heavily enough, and the competition had eclipsed me, and I fell behind. So now I'm going to have to try to make that up. And you can see, if you look at my overview points, my profit margins are about 60, 40, 28%. And you can always, once you fill out all the information on the finance page, it's going to give you accurate pro forma financial statements, which you can use to put in those formulas from the user guide to actually calculate what your ratios will be. And you can compare them to last year's ratio to actually get a good idea if you're going to make or lose points in each area. I mean, that takes a lot of extra effort, but if you do that, you should be able to keep a better handle on how many points you're making. Okay, so now I can easily surpass my profit margins based on the amount of operational investments I put in. So now, for those of you who are watching these videos, I see that some students don't spend the time to really look at these videos I'm creating to help with the simulation. That might be because they're doing so well they don't need it, but I think it's a good idea to keep in touch with you guys to make sure that to make sure that you guys are doing the best you can in the simulation. And another reason, since I put in very low or below customer expectations on a lot of the features, I wound up not selling as many cars as I thought. That was another impact. Let's go with 3,000 here. So, I mean, it hurts. You do lose some market demand, and that's just part of the game. I mean, it's all about strategy. It's what the class is about, trying to figure out, the best way to put things together, to make that profit and to keep shareholders happy. It's not easy. It's very frustrating, takes a lot of time. But sometimes you just have to look at your bottom line here and see, what can I do to try and get, so I have to lower my features or increase my price. My price is at the top end, and I'm doing everything I can to get to a higher profit margin so I can really expand my profits as much as possible. So here I put in the higher profit margins. Okay, so again, I skipped the marketing page because it takes me a while to put that in. And I'm going to go straight to 35, straight to putting in my cars, increasing my operational investments, and see how I'm doing on profits. Okay, so I have a decent amount of profits, and again, going to buy back some stock. Pay off some debt. Okay, so I tried to correct for what I did wrong last round, a little bit more aggressive on my growth. Let's look at my forecast of sales a little bit more, keeping a little bit bigger surplus just in case I have a deficit, and on to the next round. And I see that I did better in points. Now, keep in mind, I'm getting these scores and I'm doing very little analysis. I'm not even really double checking things too much, but I'm still kind of showing the flow of how you should be looking at things. But I was able to increase my profit margins on the gross level. My operational went down a little bit because I advertised a little bit more heavily. And so these are all things you have to kind of balance out when you play the game, as far as what your investments are, what you're advertising. And you can see here that I grossly, because I didn't pay attention to my forecast, I had this situation where I undersold. I could have made a lot more cars and made a lot more money, and so I greatly underforecasted. So this is why forecasting is one of the real keys to succeeding well in the simulation. Look at all these cars I gave up in sales. I could have had profits, and I could have done much better with. That's just something that, using the practice simulation helps you to kind of test out these theories, test out your methodology of how you're playing the simulation, make mistakes here, so when you apply it to the real team competition, you don't make the mistakes there. And the real team competition is a little bit tougher because you're playing against real human people, not computer players. So, okay, so I hope that this video has been helpful in going over some of the basics and some ideas for improving your sim and getting better scores. Many of you are doing very well already, but I just encourage you to think strategically about methods to increase your sales and your profits and your earnings per share to get better scores and more points. Okay, till next time, talk to you then.